everyone for joining. Welcome. This is our November webinar. So what we'll be focusing on this month is the different acceptable loan purposes that we can accept under a Heartland Reverse Mortgage. This webinar will be our last one for this year. So I think just due to the Christmas and New Year break, we will be recommencing this webinar series as of January 2021. So we've got Brady Sumner on the call, who is our broker support executive. So he'll be assisting with the second half of this webinar and also will be available for some questions at the end. If you do have any questions as we go through, please ask you to just pop them into the Q&A section or the chat box, and we'll be able to go through them at the end together. Okay, so I'll just quickly go through. All right, so what we've got on the agenda for today is we wanted to go through, I guess, the loan purposes as a whole, and then we wanted to focus on some more common ones such as debt consolidation and home improvements. We wanted to put a focus on gifting, seeing as that we are coming into Christmas and there may be some gifting requests coming through, before finishing on our loan structures and funding options and a case study. Okay, so before we jump in, I thought it would be important to understand, I guess, the general purpose of a reverse mortgage, which is to make retirement more comfortable. So although there are many loan uses, we need to ensure that it is of benefit to the customer and that the loan is not unsuitable. So to help explain this, I guess I've popped on the screen an infographic that goes through the different levels of, I guess, comfortability in retirement. So at the bottom, you can see is the aged pension or the full aged pension, which is approximately $37,000 per year for a couple. And this is, I guess, going to cover the very basic living needs, such as, keeping the house running, maybe public transport and basic food items. In the second tier is what is considered modest living, which is approximately $45,000 per year for a couple. This might be where you see customers are able to, buy their own car and buy some healthier options in terms of groceries. And then we look at our top tier, and this is what is considered to be a comfortable retirement. So we're looking at approximately $61,000 per year for a couple. And what you can see in that top tier is this could be customers that are able to make some home improvements to make their lives a bit more comfortable, traveling, medical expenses, and things like that. So I guess when you're looking at that bottom tier, that 37,000 to that top tier of 61, there is that, I guess, that gap there in that comfortable retirement. And that's where, I guess, a reverse mortgage may be able to come in and assist them. Okay, so we'll look at some of the common reverse mortgage purposes. So what you can see is a pie chart on the screen there, and that goes through some of our more common purposes. So we do have the percentages on the table down the bottom, but what you can see from this is our top three contenders are our debt consolidation, home improvements, home improvements, extra income, and debt consolidation. So we've got debt consolidation coming in at number one. So we do see about 51% of our customers are looking to refinance their debt. And what you can see as well, that table down the bottom, percentages don't quite add up to 100%, I am aware, and that's essentially because a lot of our customers do like to use a reverse mortgage for more than one purpose within the one application. So you might have customers looking to refinance their mortgage and also do some home improvements and get a regular advance for some extra income, for example. We do see quite a few different types of loan uses, and we do try to cater to our customers. So, for example, with aged care, we do have a product built specifically for aged care. Some loan uses will require additional information. So, for example, if you have a customer that is looking to take a loan out for business or investment purposes, we may need to see some financial advice. And for gifting, for example, we'll go through a bit more detail, but they'll need to contact Centrelink to confirm no negative impact. So we'll jump right into, I guess, our first loan purpose that we're focusing on today, which is debt consolidation. So from our previous slide, we could see that 51% of our customers use a reverse mortgage for debt consolidation. So what we can see is that a lot of Australian seniors are bringing their debt into retirement. Unfortunately, they're not bringing that steady income that comes with their employment with them. So I guess, what you can see on the screen here is just, I guess, a depiction of how that has changed over the years. So between 1987 and 2015, you can see that mortgage debt increased by 600%. So from 27,000 to over 185. So if we look back to the 1990s, mortgage indebtedness was uncommon among the 55 to 64 cohort. And then between 1996 and 2013, the proportion of 55s and over still paying off their mortgage climbed from under 20% to 45%. So, it's been another 5 years from that again. So, it is steadily increasing, and we're seeing that as well. So I guess that's obviously going to be one of our top contenders, and it's something that we do look to help out with customers. So when we're doing or looking at debt consolidation for a Heartland Reverse Mortgage, we want to assist our customers so that they're in a better financial position to what they are. So in saying that, if you have a client with substantial debt, we'll need to use the loan to consolidate that debt. So it could be credit cards, personal loans, car loans and mortgages, whatever it is. They can retain debt limits of about $10,000 per borrower. So that's about $20,000 per couple. And what that means is, if you've got a customer that has $50,000 limit on their credit cards, they'll need to be reducing those card balances or closing the accounts, as a special condition to the loan. Of course, these are all case by case. There may be a little bit of wiggle room there, but that's just generally a rule of thumb. If you do have a customer that has an existing mortgage on their security property, this will need to be repaid and removed prior to settlement. So Heartland needs to be the one and only mortgagee on title. If they have any existing unpaid defaults on their credit report, so we do a credit report at time of the application, these will need to be cleared on or before settlement. And also they'll need to be updated to paid as a special condition. So that'll all come through with the assessment, just something to keep in mind. If your customers do have that, they'll need to clear those as well. Before I move on, I'll just quickly mention, I guess, things to be aware of when doing your application. So please make sure that you complete the liabilities section on the application form. Please ensure that when you are submitting your statements of debts to be repaid with the application, that they have all of the account information visible on them. So that, the customer names, their current balance, credit limit and repayment details as well, so that we can repay, and that they're pretty current as well is important. Okay, so I wanted to do a quick poll on debt consolidation. So in this case, we've got Robert and Anne, 73 and 70 years old. They're looking to apply for a reverse mortgage on their property worth $400,000. So based on Anne's age of 70, they have a maximum LVR of 25%. Based off that property value of $400,000, they can lend up to $100,000. So you can see on the screen there, they've got their structure. So they're looking to borrow $40,000 to make some home improvements up front. They want to use $10,000 to purchase a new car and then have $50,000 for future needs in cash reserve. So during the assessment, we've done a title search which showed a mortgage to Westpac, and the customers confirmed that they had a current debt of $35,000. So I'll just quickly share this poll and feel free to vote. Should be going up onto the screen now. I'll give you a few moments to select. Give it a few more moments. Okay. All right, so we've had a few different answers here. So we can see the options were, yes, this would be acceptable as is, where we had a few. So if we're looking at that, I guess we'll look at the scenario and go through the answers. So what we can see here is from the maximum lend amount, they are looking to borrow their max LVR. From our previous slide, we went over, obviously, the fact that we will need to repay debts if they do have them, and especially if they have a mortgage, we do need to be the one and only on title. So in this particular case, would this be an acceptable loan for Heartland Seniors Finance? Yes, I think that this would be acceptable, but we would need to adjust the loan structure to include that mortgage repayment. So I guess what I would do in this case is have a chat with Robert and Anne and see if they're happy to take $35,000 out of their potential cash reserve and pop that into the lump sum to repay the mortgage. And then any residual funds they can pop into cash reserve for future needs. Okay. All right, so the next one that I wanted to, I guess, put some focus on today was gifting. Christmas is right around the corner, so I think that we may see a spike in some gifting requests. But, using the reverse mortgage for gifting, it can be a great way for customers to support their family any time of the year, and we do see it come through quite often. So when we are looking at gifting, there's some additional risks, and as a responsible lender, we have some additional inquiries that must be made to ensure that the loan is not unsuitable. These inquiries, I guess, form part of our duty of care to these customers. So we'll go through some of the considerations that we look at and the things that you should be aware of when you have a customer that is looking to gift. And also this gifting as well, it's not only for new loans, especially coming into Christmas time, we'll probably be seeing quite a lot of this come through the cash reserve component. So it's something to be aware of with that as well if they come through. Okay, so no conflict of interest between parties of the loan. We need to ensure that the gifting doesn't have a negative impact on the borrower's income. So if they do earn a pension, and it's quite common for our customers to have the pension, we need to ensure that, if the amount alters their government entitlements, we need to confirm what that impact is, and there needs to be a strong mitigant if we are to proceed. We need to ensure that future needs have been considered, so aged care, bereavement, emergencies and things like that. We do see, that you could have a customer that's, between 60 to 70 years old. They might not be thinking about, what they're going to need to be doing, in 20 or 30 years' time. But it is important to have that conversation. And what you'll notice if you've done an application with us before is that we do put quite a big focus on the future needs, and also, that's about, their plan and strategy for the future, and also what they're looking to keep or retain in terms of equity as well. So that's all built into the application form. But I mean, look, if it is something like a cash reserve, again, it is important to have these conversations and to also provide details of that as well. We do like for all children and beneficiaries to be aware of the loan if there is a large gift taking place. Obviously, that does just help with any future conflicts coming out. We do like to make sure that everyone is aware. To provide a detailed explanation on the purpose of the gift as well, that does help our assessment team greatly. Something that we get quite often is customers looking to use a reverse mortgage to help their children to purchase a home. So is this acceptable? Yes, but again, we would need clarification that it's not going to negatively impact that customer, so with that pension again, and that their future needs is sufficiently covered. If you have a customer that has signed the application under power of attorney, administration or guardianship order, we will not allow any gifting to be done in that case. Another quite common purpose that I haven't popped on the screen here, sorry, is customers looking to, I guess, gift to family, friends or children to support a business or investment venture for them. If you do have a loan or a scenario like that, please get in contact with us and we'll have to have a quick chat about it, because there are some additional things that may need to be obtained. So, for example, that financial advice for the business or investment venture. All right, we'll do another quick poll on gifting. So in this case, we've got Cheryl, who's 66. She's looking to apply for a reverse mortgage on her $600,000 home in Sydney. So at 66, her max LVR is 21%, and on her property value, she can borrow up to $126,000. So you can see on the screen there, we've got her structure that she's applied for. So she's got $10,000 to fix her fence in the backyard, $5,000 to cover an upcoming medical expense, and then $50,000 to buy her grandson a new car for Christmas. So we're looking at a total loan of $65,000. I'll just quickly launch this poll and you can vote. I'll give you guys a few moments again. All right, I will share these out. Okay. All right, so we have a bit of a split here. So we've got 71%, yes, we would be able to assist, 21%, no, we wouldn't, and 7%, I'm not sure. So if we look at this case, what we can see is, well, the things that I would point out is we're looking at her age. She is still relatively quite young. So, she's looking to borrow, I guess, $65,000, which is not her maximum LVR, which definitely does help. If she was to borrow the maximum, we would obviously want to maybe get some more details. But in this case, I would say, would we be able to assist with her loan request? I'd say yes, we would be able to assist. Just keeping in mind that because of that gift, we would need her to explain her plan for the future. You know, if she's looking to retain any equity, and I guess her plan for aged care and future needs and things like that. So I think that is something that we could assist with. Just with some more details, and also some confirmation, I guess, from Centrelink as well, that it's not going to negatively impact her as well. All right, so I'm going to pass this over to Brodie, who will take you through the second half, and I'll come back at the end for some questions. All right, Brodie, I'm not sure if you're speaking, but you might be on mute.
Sorry, I might have to unmute myself before I request control.
That's okay, all good.
Cool.
All right, should be good to go.
Hi guys, so I'll be running through home improvements with you guys today. So one of Heartland's most common purposes for reverse mortgage is home improvements. So in fact, in the last financial year, it was used for 47% of the reverse mortgages provided to our senior customers. So renovations and repairs may be required in the homes of those over the age of 60 to best suit their lifestyles as they get older. So ramps and rails may be required for those in need of ease of movement and access, or repairs may be required to allow the seniors to live in a more safer home. This may ultimately allow them to have an increased sense of well-being and, as an additional benefit, protect the value of their home. Heartland will accept cosmetic construction to the security property, such as general maintenance, plumbing repairs, fixing unsafe pathways, but structural major type construction is not accepted. However, it will be acceptable for major construction if the construction is done to the security, separate from the security property. An example of this could be a council approved granny flat. So I'm going to run through a poll here. 73-year-old retiree Sandra wishes to make some improvements to her home, including building rails and bars throughout her home, plus extending her house to include another bedroom so her family and friends can stay with her from time to time. Is this an acceptable loan purpose?
We'll just share it, Brodie.
Yeah. So you guys can select your answers or give it a minute. Okay, good. So Oh, nice little split down the middle almost. So in this circumstance, because of the structural construction to the security property, we would not be able to accept it in this instance. This has the potential to significantly affect the value of the property. So yeah, not in that case. It's only when it is separate we will consider a council approved granny flag. Okay. So moving on. So I'd like to now briefly speak about the loan structures and funding options offered at Heartland. Heartland understands the importance of having flexibility to ensure your clients' needs are met and assist them with a number of loan purposes we've spoken about today and shown in the pie chart above. Heartland have three types of drawdown options. Firstly, we have the initial advance. This is drawn at settlement and is taken out as a lump sum. It should be noted that a minimum of $5,000 must be drawn on a settlement for our Heartland loans. The initial advance is best used for debt consolidation, home repairs, purchase of a new vehicle and travel. Next, we have the regular advance option, which allows seniors to receive funds regularly, so they can supplement a regular income to help with day-to-day expenses or to provide assistance for aged care costs, such as the daily accommodation payment. Lastly, there is the cash reserve, similar to a line of credit, where funds sit within the account, only accruing interest when funds are drawn. So these can be best utilized for an emergency fund, for healthcare, or potential future home repairs, and of course, travel. A combination of the three may be used to best suit your client's needs. For example, it may be advisable to take out an initial advance or a lump sum for debt consolidation purposes, but then further funds may also be required for the future, for unexpected emergencies. But the client may want to limit the amount of interest being charged today. So the cash reserve or the regular advance can be best utilized in this instance to ensure that the interest only accumulates on the funds that are drawn. And this is also outlined in the following scenario. So Ken, who is 77 and he's single with an ongoing health condition. His home value is worth $1.3 million, and the maximum loan amount is $416,000, which is based on Ken's age of 77, giving an LVR of 32%. So he takes out an initial borrowing of $33,000. This is only to pay off his existing credit card debt and existing rate bills. So this leaves him with a remaining available facility of $383,000, which he decides to split between both the regular advance and the cash reserve. So for the regular advance, he puts on $3,000 per month, which is $324,000 over 9 years, to cover that ongoing health expense, but also to maintain the livelihood, as he was only receiving a small pension prior to this. And then he also can take out further $59,000 in the cash reserve, which will sit within an account, does not accrue interest until drawn, for any future emergency medical expenses and other unforeseen expenses. So we've looked at acceptable loan purposes for Heartland seniors, such as debt consolidation and home improvements, along with the loan structures and access options available to our customers to ensure they have that level of flexibility. I will now throw it back to Emma and we can run through some questions. Cheers.
Thanks so much, Brody. And thank you everyone for kind of joining in and listening to all of that. Yeah, as Brody mentioned, I think that there are, obviously different options for different customers. No two customer is the same, and that's kind of why we wanted to go through those funding options, is because we've built our product to try and cater to these different customers and to their needs. So what I'll do is I'll just open up our question and answer box. If you do have any questions, of course, that you can't think of during this time, you are able to contact us. I'll leave the contacts on the screen there. So I've got a question from Andrew Kate. Hey, Andrew. He's just asked, so granny flats are okay? Yes. So I know that there's been a big question mark over this for the last year or so. But as long as there's no, I guess, major structural change to the security property or the main dwelling, then this is okay from now onwards. So that's something that we can look into, and I'm sure you'll be happy about that as well. Is there any other questions at all? I'll leave it open for a few moments. And again, yeah, please feel free to give us a call or an email if there is anything else. Okay, Andrew, you've got another one. So is there an amount where cosmetic renovations would need quotes receipts? Okay, so I think, look, as Brody mentioned, with the cosmetic renovations, we're really looking at, I guess, like the look of the property, you know, whether they need painting or they need plumbing or this or that. So I think if you've got something that's going to be quite high scale, we don't have a set amount. But if you're in doubt, or if it does seem like something that's going to be quite high scale, I would definitely at least give us a call or an email first, and then we can give you that answer before you go to the application phase. And then in the application phase, you can say, you know, we've checked in with the broker team and they've confirmed that this is okay to proceed, and they'll assess it on that basis. Michael Rivas, so do clients need to supply invoices for purposes? So I'm assuming, and please correct me if I'm wrong, Michael, were you just questioning as in for, you know, home improvements? If not, let me know. But for home improvements, I wouldn't provide invoices from the get-go. When our assessment team goes through and assess, they'll have a look at how much they're looking to borrow, and they'll generally kind of send you an email and say, you know, look, this might be something that we want to see invoices for, and that can have to do with the nature of the works, but it may also have to do with the customer's position and whether we want to pay it directly as well. So I would say send the application first, and then the assessor will guide you on what they're wanting. We've got a question from Clara. So she's asked, what percentage of the limit would be available for cash out? So we've got the different funding options. So obviously we've got our upfront or our lump sum, our cash reserve, and our regular advance. So what Brody mentioned was they do have to take at least $5,000 as a lump sum. Anything else, they can go up to their LVR limit. So their LVR limit will be worked out on the age of the youngest customer minus 45. So for example, if you had a customer 60 years old, they could borrow 15%. So they'd be able to borrow, you know, 15% cash out at the get-go. Is there anything that you wanted to add to that, Brody?
No, I think you've hit the nail on the head right there. Yeah, it really just comes down to the LVR at the end of the day, isn't it? Yeah,
exactly right. We've got one more here from Barry. Hi, Barry. So he's asked maximum term for monthly pension. So I'm assuming, and again, please correct me if I'm wrong here, but was that just on our regular advance amount? Do we have a maximum term? So with our regular advance, where we can allow customers to borrow, I guess, up to 10 years, and they can choose their frequency to be monthly, quarterly, or annually. They do have up to 10 years on that. So please let me know if I've interpreted that incorrectly. Okay, I think that's everything in there for now. Again, please let me know if there is any other questions. Oh, sorry, I've just gotten one more. Michael, so we've got client wants cash out, lump sum, just to have cash for lifestyle, any conditions. Okay, so so your client needs $150,000. And was that just a lump sum? Please put in a comment. I might need some more information on that. Sorry, Michael, I'm just a little bit unsure of what it is that you were asking. They can, of course, have a lump sum if they need $150,000 and they have the LVR for it. They can certainly take that out if that's what they need. I think something important on that as well is we only really do want customers to take what they actually need right now. So I guess in that, you know, if they need $150,000 for lifestyle, We might say, you know, is there an immediate need for that whole amount? If there isn't, maybe they could consider putting a portion of that into cash reserve for future needs. And the benefit of that is that they're not going to be getting charged any interest on that portion. Of course, that's something that's case by case. If they're able to take it out all in one go, we'll obviously have a chat with you at that time on that particular case. Brodie, did you have anything else to add to that, or?
No, once again.
Good? Yeah. All good. Okay. All right. So can the trustee of the estate be the borrower? Okay. So with the borrower, no, I'm actually not entirely too sure. Brodie, are you aware of that? Otherwise, I might have to come back to you on that. I'll have to ask our credit team. That's a really good question.
Yeah, I haven't
Brodie, if you're unsure, yeah. I said, Brodie, if you're unsure, I'll have to get back to you on that one. That was a great question, though. I'll send it through in the email after the presentation.
Yeah, absolutely.
To my knowledge, I don't think I've ever seen it myself, but that's not to say that it can't be done. So yeah, I'll definitely come back to you on that one. If there is any other questions, yeah, please let me know. I'll leave it open for just a few more moments, and then if there is anything else afterwards, please let me know via call or email. Okay, that looks to be it. Thank you everyone for joining. Brodie, did you have anything else that you wanted to add before we close off?
No, not so much from me. I just really appreciate you guys attending today, and I hope you guys have taken something away from it. But yeah, I'm with Broker Support, so please you can contact me through the emails showing up ahead. You've got my email there, and also the general inquiries inbox. You can also give me a call anytime. I'm there to assist with scenarios or whatever else you need. So yeah, please give me contact if you need be.
Beautiful. Thanks for that, Brodie. And we'll be sending out an email after this with a link to the recording if you do want to view it. We'll also be sending out your CPD points as well. So keep an eye out for that, and I'll get back to you on that good question that we received. All right, thank you everyone. And as I mentioned, we will not be having a webinar for December. We're taking a bit of a break. So please look after yourselves and have a good Christmas and New Year. All right, that's everything. Thanks, guys.